Well, the market's holding on to some big gains, ending a two-day skid here on Wall Street. The shock of Europe's debt issues taking its toll on stocks over the course of the last month, but with traders beginning to focus on fundamentals in the U.S. and the S&P touching up against some important technical levels, is now a time for investors to be buying some high-quality names that perhaps might have been oversold. Joining me to discuss that very issue, Rob Slimer, head of U.S. technical strategy with RBC Capital Markets, also Lee Munson, Chief Investment Officer with Portfolio Asset Management. Lee, good to see you. I'll put this one first to you. Your take on whether or not this is some momentum that we might see continuing throughout the month. Have investors really discarded all these worldwide headwinds that have been plaguing the market and certainly plagued the market in the month of May?
Well, absolutely. I mean, we've had 7 days where the S&P was right around a 1070, and it was able to hold that level. So today, this may be the day where we're turning, and we can see that momentum. The only thing that would really cause me to change my mind at this point is if we saw the S&P break 1040. At that point, I might get a little bit bearish. But right now, I think that you want to, find the stocks with the beta, get in those financials, some of the commodity stocks, selected technology. And I say you make your bets right now. I think that we could see 1,200 on the S&P by Labor Day, if not a little bit after that.
Rob, you're a technical guy. What do you think of these levels?
I think we've got to be really clear on the time frame that we're talking about. I think for traders, the market's very oversold. We've been looking for a low for the last week and a half, and I think it's taking hold. Today's action is obviously fairly encouraging, but our weekly work continues to suggest that the summer is going to be a very, very choppy period. I think for investors, longer-term investors, looking out through Q3 and into Q4, there's a tremendous setup starting to build here technically for a long-term entry into the market, and we're going to get quite bullish as this weekly data unwinds. But for traders right here, I have to agree. I think there's a good trading opportunity. We're looking at metals. I think a lot of the domestic themes, whether it's consumer stocks, retails, restaurants, a bunch of the the rails look very attractive here. I think they're great trades, but they're not great investments at this point.
Lee, a lot of people focused, of course, on this big jobs report coming out Friday. If we do not add as many jobs as investors are looking for, if we see an unemployment rate that continues to move higher, what is that going to mean for the market?
I think if we see a sell-off on Friday especially, I think it's going to be an opportunity for people to buy that dip. But, I think this summer there's a good point in trying to buy the dip and sell the rip. I don't think that fundamentally, if those numbers disappoint a little bit, it's going to make a difference. I would be cautious, though, because as we near the end of the year, if we really are able to hit highs by the fall, I might want to be a little bit more defensive in the fourth quarter as we get towards December. But right now, I think that you got to be bullish. I think you got to buy, but you also have to
what's your reason for this? I mean, are you talking about fundamental issues here, that we're actually seeing a much stronger economy in the U.S. and that perhaps money that would alternatively or previously have gone into Europe might be coming into the U.S. at this stage in time? I mean, what is your reason to get in other than things look rather cheap and buy right now?
Well, because all of the economic indicators that we had, especially over the last few weeks, in terms of manufacturing numbers here in the States as well as in Europe, they're relatively good, but they got overshadowed for so many weeks during this little mini crisis that we have. So I think as investors, we're past earnings right now. There's not a lot of news. I think people are looking back. The government's putting a gun to our head and saying, we're going to give you 0% to hold cash, or you can go find some stocks and try to make money there. Hey, there's even natural demand for treasuries.
Rob, before we go, we're out of time here, but just give me your price target on the, not price target, give me your overall target here on the S&P.
I think the trading call here is 1150. I think it's still possible we could see the S&P get down to 1100 sometime in Q3. And at that point, then we have a very sustainable run. I think we're out to higher highs by year end, and then well through 2011. I think we're higher at that point as well.
Okay, gentlemen, good to see you. Thank you very much.